Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, let's get into the analysis portion of this video. Right now, we see the markets are up higher today. S&P 500 up 12 points, Dow up 76.5, and NASDAQ up about 27 on the day. The leaders today, it's pretty broad-based. On my watch list, there's a few lower. Exxon's lower due to earnings this morning that were reported. Google, which has had a big run, is pulling back a little bit, but everything else is pretty much green across the screen. You have some earnings from yesterday after the bell that are up, some that are down, but the name brand stocks are mostly doing better except for Exxon and Google out there. The spiders right now are up about $1.23 just off the highs of the day. And you can see really we've had such an impressive run again from the lows back last Thursday. So 1 week ago today, we made a low pivot at 153.50. Since that point, we've gone up to 159.27. That is an epic move in this market. All right, again, we've seen these kind of buy-the-dip mentality moves where it just shoots right back up. And so far, we haven't taken out the double top on the daily chart right here from about, 3 weeks ago. But we are on the verge of it, and tomorrow could be the day. All right, tomorrow we get the GDP report. Today after the bell, we have Amazon and Baidu reporting. But really, that GDP report will be the big number of the week and of the day. So watch that number very, very closely tomorrow. All right, now one little tidbit I want to pass along to you guys. The government in the last week or so, decided to add in new things to the GDP number. All right, well, why is that important to us? Well, obviously, when you add in things like R&D expense, which wasn't added before, it's going to get a better GDP number. Right, so the government, again, on a whim, really the Labor Department, which is part of the government, decided to add in new things into the GDP number. That tells me that the number could be slightly better than expected because they're adding it in, but maybe it gives us a gap up and a fade as the market realizes it's based on things that were added in, not real growth of the underlying factors that we saw in the last GDP number. Okay. In addition, I think it's important to kind of keep in mind that this GDP number, if it were to come in weaker than expected, even with the additions, then that could be a real shocker for the market. Okay, and just short term, the markets obviously are overbought right now. It's been an amazing swing trading market. The profits generated here in the Money Stocks are just exponential for members. But tomorrow, again, that's the key thing. Watch that GDP number. Is it better than expected? If it is, you might get a quick gap up and a fade. If it's worse than expected, I think you could see a pretty big drop. The one little side note could be is if it's a really good GDP number, then you could see the markets push up, the spiders, the S&P 500, take out their all-time highs, which right now we're just hovering about 65 cents below on the SPY. That's only about a 6-point move on the S&P 500, so it's really not that outlandish to think that that could be a possibility. All right, let's go over some key charts here. First and foremost, resistance double top on the spiders, and then on any major pullback, this trend line right here, it's a triple quadruple bottom. It's the gap window here, hit there, and hit there. So that's your low side. If you get through that, you have a gap fill right below. So there's really a lot of support down here. Even if we were to flush again, tons of support on the market right around this 153, 154 level. All right, going to a couple different charts. Let's take a look at Google, which is down today about $2.80. But the reasoning behind this is pretty simple. I mean, Google has had such an epic move up off of those earnings announcements and so forth. You basically were trading just 1 week ago at 760, and now you're at 810, and that's after about a $3 pullback now. So it's a big $50 move, almost 10% on Google. So it's just pausing. Now, if it continues to consolidate above these moving averages over the next few days, you could actually be looking at a long play in Google. All right, now a lot of people were asking me about my projections. Do I think the market's, going to go down? What do I think? Believe it or not, as of today's action, I will say this. There's more and more of a chance of this market going higher and making new all-time highs. All right, now it doesn't really matter to us because we're just short-term swing traders, and so far we've had 3 winning swing trades this week. We had 4 winning swing trades last week, both on the long and short side. So again, it doesn't matter too much to us, but it's important to be on the cutting edge of what the market signals are telling us based on the proprietary methodology. Okay, so we'll have to watch and see again how it all plays out. Let's see what else we can see here. Apple today, which had a kind of a weird day yesterday on earnings. It's slightly positive today, but this is your big level. See this green line? Unless it can get above that, which again is at around the 420 level, um, Apple should be looked at as being weak. All right, unless by chance it closes above that level. As long as it stays below, downside is very, very profitable, yes, and probable. All right, a couple other stocks I'm watching today. Amazon is up $6.33. This stock has earnings today. Notice the triangular breakout here. All right, so you have a triangular breakout pattern here. Now, the only issue is that a lot of amateurs would say, oh, that's a breakout. I'm not so sure on that because mainly there's no confirmation yet. Plus, it's into a double top here. And if you take this pivot high right there, it's just above. So there's a lot of resistance here. Yes, it has broken out, but there's no confirmation yet, which we have to keep in mind. All right, very, very important little factor there. Okay. Let's see what else we have here on the markets as we scan through. JP Morgan is trading up 66 cents. Notice how it went perfectly into a little double top here. All right, nice little double top on the markets. And again, right into that, or on the JPM chart, right into a double top on the daily, which again, you can see that same level here. If we go to the intraday chart, I can just zoom back and look at this. I mean, that's the same level. That's a great level right there. In fact, I gave that to my members in the Intra Day Stock Chat today to trade, and a bunch of them, I'm sure, traded it throughout the course of the morning session. So nice little pullback on JPM. JPM is, to me, looks a little on the weaker side. It did break above the 50, but it's right into major resistance here, and we'll keep an eye on that as overall. One stock I think could be a good swing trade on the short side is Target. If you look at the weekly Target chart and go back to 2007, you have now hit a double top on the weekly chart from 2007's high. That's a very significant level, in my opinion, on Target. Okay. Chevron right now trading up $1.36, just hit the $20 level, which was actually a key gap fill. Since then, it has started to dump out, so we'll keep a close eye on Chevron here and see if it can make any sort of major move into the end of the day. But we are seeing some weakness in the afternoon here, starting to inch into the markets. All right, if we go back to the SPY, you can see this starting to break down here. And this could be, in all fairness, this is most likely profit taking going into the GDP number. All right, there are some, I'm sure, some big money out there, even myself, who've taken a little bit of our longs off the table, just because the GDP number is an unknown number. You don't know what the GDP will be, therefore you got to be a little more careful. Okay? All right, folks, on that note, I'm going to step aside, get back to trading this as we get a little bit more volatility on this drop. I want to be ready to play it. I encourage you to come here to InTheMoneyStocks.com. Join us. Take the 7-day free trial. Research Center is for swing traders and investors, while day traders go towards the intraday stock chat. We'll see you all here at InTheMoneyStocks.com as we continue to make plenty of money. Take care.